Welcome to today's What Will Move the Market show. I'm your host Prem. It's Thursday, January 29th, 2026, and here is everything you need to know as the markets open for today. Let me take you through the overnight action on Wall Street and what's ahead for us in India. Wall Street wrapped up yesterday with the Federal Reserve's widely anticipated decision to keep interest rates unchanged. The central bank voted 10-2 to maintain the federal funds rate in a range of 3.5 to 3.75%, pausing after three consecutive rate cuts through the end of 2025. Federal Chair Jerome Powell noted in his press conference that while tensions between employment and inflation have eased, the committee is taking a measured approach and remains data-dependent on future policy moves. The S&P 500 essentially ended flat, dipping just a point and closing at 6,978. The Dow Jones edged slightly higher, gaining 12 points to end at 49,027. The Nasdaq Composite delivered the strongest performance among the three, rising 40 points and closing at 23,857. Technology stocks led much of the early session strength, though momentum faded somewhat after Powell's comments. Notable movers included ASML, the Dutch semiconductor equipment leader, which rallied on record orders, though the stock gave back some gains as the session progressed. Nvidia and Broadcom also saw mixed action as investors digest earnings expectations from the mega-cap AI firms due later this week. Turning to Indian ADRs overnight, the picture was mixed and fairly subdued. Infosys-sponsored ADR declined 1.75% to settle at $17.93, reflecting some profit-taking in the IT sector as global tech sentiment remains uncertain. HDFC Bank sponsored ADR slipped 0.4% to $32.31, while ICICI Bank sponsored ADR edged down 0.57% to $29.58. However, Reliance Industries GDR managed a gain, rising 0.83% to $60.80, suggesting some resilience in energy-linked equities. For Indian investors, the key takeaway is that ADR weakness reflects caution in global tech and banking, though the Reliance gain hints at underlying support from commodity strength. This mixed signal suggests domestic investors should watch for sector-specific cues in the opening bell. Moving to Asian markets and GIFT Nifty, Japan's Nikkei 225 is trading near 53,439, down 0.56% from its previous close, as Japanese exporters face headwinds from currency strength and some banking sector softness. The Shanghai Composite is trading near 4,758.58 in Chinese yuan, up 0.27%, as mainland Chinese investors show cautious optimism. Most importantly, Hong Kong's Hang Seng has been the star performer, trading near 27,562.8 in Hong Kong dollars, down just 0.14% as it consolidates recent gains. The Hang Seng has now risen for 6 consecutive trading sessions, reaching multi-year highs on broad-based strength in energy, materials and financial stocks, supported by mainland Chinese money flowing into Hong Kong. GIFT Nifty is trading near 25,384, down 0.17%, which suggests a marginally softer opening for the Indian market this morning. However, this modest decline should not be read as bearish, given the technical support levels holding and the structural positives intact. Keep an eye on GIFT Nifty levels near 25,250, which would signal stronger downside momentum if breached. On the macro front, Asian sentiment has been buoyed by China's approval of Nvidia's newest H200 AI chips for import, a significant development for semiconductor stocks, and Beijing's continued fiscal support, which is sustaining equity demand. On the global news front, geopolitical tensions continue to support commodity prices. Crude oil has benefited from these developments and broader supply concerns, with Brent crude prices showing underlying strength. Additionally, the recent surge in gold prices, with the precious metal breaking above $5,200 per ounce for the first time, reflects both safe haven demand and currency weakness, as the US dollar has slipped to near 4-year lows. These themes are likely to keep energy stocks supported and could provide tailwinds for India's import-dependent economy if crude continues to moderate. Domestically, today is a significant day for liquidity management. The Reserve Bank of India will conduct an open market operation auction this morning to purchase 50,000 crore rupees of government securities, injecting critical liquidity into the banking system. This is part of the RBI's broader $230 billion liquidity support package announced last week, aimed at smoothing tight conditions and supporting credit growth. With Parliament having passed the insurance bill allowing 100% foreign direct investment in insurance, the sector remains in the spotlight for potential structural gains. FII flows have been mixed in recent sessions, though domestic institutional investors remain steady buyers, providing a cushion for the market. For technical traders, today's immediate support for Nifty 50 is placed in the 25,000 and 25,100 zone, with the next key support at 24,970. Resistance overhead remains in the 25,200 to 25,250 range. Bank Nifty should respect support in the 58,500 to 58,600 zone, with key overhead resistance near 59,200. Watch for any sharp break above or below these levels to signal fresh directional momentum. The India VIX remains in comfortable territory, suggesting no panic, though traders should be alert to any sudden volatility spikes that could accelerate reversions to support. On the commodities front, crude oil is trading near $63.63 per barrel, showing modest strength amid geopolitical concerns and supply tightness. This remains within the $55 to $70 range that analysts expect for the near term. Gold has surged to $5,489 per ounce, up 1.37%, extending its recent breakout as safe haven flows persist. Silver is trading near $117.34 per ounce, up 0.64%, while natural gas has climbed to $3.715 per unit, up 0.83%, reflecting seasonal demand. These commodity moves are broadly supportive for India's domestic energy and metal stocks, though elevated crude prices could weigh on inflation expectations if they persist. As you prepare for trading today, remember that while GIFT Nifty suggests some marginally softer opening, the underlying fundamentals remain intact, with RBI liquidity support, structural reforms in insurance, and Asian strength providing counterbalance. Use any weakness to hunt for quality names in banking, financials, and energy sectors on dips. Avoid chasing rallies in volatile counters until you see clearer technical confirmation. Focus on setups where you can define your risk-reward with precision. This is a day for tactical trades rather than aggressive directional bets, so stay disciplined on stop losses and position sizing. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day with the latest market insights and analysis to keep you ahead of the curve. Thank you for joining What Will Move the Market.